I hope everyone's doing well and welcome back to another video. So today's video is going to be quite a basic one, right? But I think it's one that's quite necessary. Now, recently everybody knows crypto is doing very well. If you're a crypto investor, you're probably very happy. We've seen a big run up on Bitcoin, and what this usually comes with is a lot of new investors, right? The thing with crypto is it can be a very confusing industry. There's a lot of moving parts, and it's hard to know what to do, when to do it, and how to even get involved sometimes. So, I've taken all the questions I received, right? And I've tried to condense it into a small beginner video that will at least get you started, right? Give you the starting point of I need to go look into this, go look into that. This is how I trade it. This is, what I need to do. So this is going to be essentially everything you need to know as a beginner crypto trader, as the title says, right? To cover the basics and really get you started in the space. And of course, if you watch this video, if you have any questions that are still left over or unanswered, just drop them in the comments and I'll make sure to get back to all of you. So cool, let's get straight into it. Now, the first thing here is, if I start giving examples of coins, if I talk about anything specific, it is not financial advice, guys. I'm not telling you to go buy anything. I'm not telling you to go sell anything, invest in this, invest in that. That is your decision to make after you have, listened to everything, if it's something you wish to do. Now, disclaimer aside, let's get into it. What is crypto, right? What are cryptocurrencies? Now, it's in the name, right? It's a currency. So, where does that crypto bit come from? It's essentially that crypto part is taken from the word encryption because they're encrypted currencies because they're digital, right? They're not a means of physical currency. You can't go and hand somebody a Bitcoin, right? You can transfer them a Bitcoin, but you can't go and hand it to them, right? Now, the way they operate, we have something called the blockchain, which they operate on, and we have a public ledger system. What does that mean? That means all transactions are available to view publicly, right? It's not like a bank account where only you can see your transactions and, they stay private. With crypto, if somebody has your wallet address, if they have your transaction ID, right, it's called a TXID, they can go ahead and view that online, right? That is a very important thing, right? Just, thinking about why is that important? Because make sure everything is transparent in space, right? Everything can be validated by a stranger, essentially, as long as they have the relevant wallet address or the TXID, right? And on top of that, crypto is a peer-to-peer system. What does that mean? Now, typically, right, if you're sending somebody money, what does that entail? Right, unless you're giving them cash, when you're typically sending somebody your money from a bank account, you have that middleman. The middleman is your bank, and even the person receiving's bank. They're holding your money. They're taking it off you. They're giving it to them. Now, to us, we don't really see that, right? It doesn't affect us. If I send money to my friend receives the money just like I send it to him. But really and truly, if I'm banking with, bank A, and I'm sending to bank B, right? Those two banks are transacting, right? With our crypto, there is no middleman most of the time, depending on how you send it, right? When we have our exchanges, it's slightly different, but you're essentially sending straight to a person, and that person sending straight to you with no middleman, right? That is how crypto works on a very basic level. All of these words, they might seem like big scary words, they're not. But it's important to understand how these things actually work. So in case you ever have any issues, you know what to look into and what's relevant, right? Cool. So now let's go into the actual relevant stuff that people will want to know. Once you understand what crypto is, you're probably thinking, how do I trade it, right? How do I go about actually buying crypto? Where do I put my crypto? How do I store it, right? So cool. CEXs, right? So that is central exchanges, and the one after is decentralized exchanges. So what are central exchanges first of all, right? A lot of you guys probably recognize this logo, Binance, right? Probably one of, if not the biggest exchange in the world, central exchanges. Another famous one you guys will probably know is Coinbase, right? But there's several out there. Now, central exchanges are usually the gateway for beginners, right, to get involved in crypto. You get your exchanges, you have to do, they call KYC, know your customer. You have to submit all your ID, verify it, etc. You get approved, you can start trading crypto. You can use your actual fiat currency, right? When you see somebody mention fiat means, our actual currency that we have, the Great British Pound, the US dollar, whatever it is. You can use them to buy cryptocurrency. Now, central exchanges are very, very good for beginners. Why? Because they make it easy, right? It's easy to integrate. The UI is easy. There's no complicated stuff on there. Now, what's the downside of central exchanges? Once you really start getting into crypto, you guys will realize central exchanges have a lot of the big coins, the sort of more famous coins, but they don't have every coin, right? And that's where decentralized exchanges come in. When a coin comes to the market, a coin will typically start off by coming on smaller exchanges, right? And some of them may be decentralized, such as PancakeSwap. Now, what's the difference between a centralized and decentralized exchange? For a decentralized exchange, you do not need an account. You don't need to submit your ID. You don't need to sign up. All you need is a online wallet, right? For example, an online wallet is called MetaMask. If you have a MetaMask wallet, you can go into PancakeSwap, you can connect them, and you can simply start trading. Whereas with Binance, if you actually want to transact on there, if you want to put your money in there, take money out, there's a lot of steps involved, right? But of course, that comes with a bit of security and a little less headache. They sort out a lot of things for you. The fees are all right and whatnot, right? Whereas decentralized exchanges, they typically have less liquidity. You're going to face more fees when you're trading. But of course, that's just part of the game. On top of that, we have what we call cold and hot wallets. Right. Now, this is pretty straightforward. A hot wallet is any wallet that is essentially connected to the internet, right? You can have a hot wallet on Binance, for example, right? If you're holding something in a wallet on Binance, right? If you're holding any specific cryptocurrency, that is a hot wallet. A cold wallet is something that is not connected to the internet. You have to manually sort of work around it and, use that to move your money, such as a ledger. Now, when you get, into crypto properly, you will hear of ledgers. Right? They're essentially the most famous company. And it's something that a lot of people recommend because ledgers allegedly cannot get hacked, right? And nobody can take your crypto. Whereas with Binance, you can get phished. Somebody may be able to hack your account in some sort of way. Exchanges can go down. It's happened in the past, right? So the ledger just brings around that idea of safety. If you can hold your crypto, then nobody but you can access it because you're going to have the specific phrase and, password, whatever it is you've put on there. Right? So this stuff is very important. This is the start of your crypto journey. Because if you're getting into crypto, you don't have crypto, right? So you have to think, how am I going to get my crypto? Usually the first step, right, if we just make it simple, is you're probably going to sign up to a website like Binance, Coinbase, Swissborg, if they operate in your country, right? If they allow you to. You go on there, you're able to deposit your money, your Great British pounds, and then from there you're able to buy whatever cryptocurrency you want to buy. For example, you may buy, let's say Bitcoin, right? Just keeping it simple. And then you decide, you know what, I want to buy a coin, but Binance does not have this coin. So I'm going to send my Bitcoin to PancakeSwap. And, PancakeSwap is made specifically for Binance chain. And I'll get into that in a second, right? But you will send your crypto to a relevant place to be able to buy the coin you want to buy. And we'll talk about how you can find these coins, how you can find out what exchange they're on, and how to go about all of that, right? But what you guys are probably getting already, that there's a lot of moving parts. Crypto is very, very complicated, right? So now let's get into the two main ways of trading your coins. Right? We have something called leverage, and we have something called spot trading. Right? Spot trading is what most people tend to do when they get into the space, right? They tend to buy a coin, they tend to hold it, they sell it later for a profit or a loss. Right? It's very simple. There's no other, small bits involved. Now, what is leverage trading? Leverage trading is typically called futures. It's in the name. You leverage your money, right? You essentially borrow money and you can trade at a specific leverage. For example, now, when we spot trade, coins are still volatile, right? Crypto is still a very volatile space, just in a general sense. When you trade with leverage, it's even more volatile, right? But it's a choice that people make. If you're very confident, right? Let's assume Bitcoin is at 60K and you think, from here, I'm super confident Bitcoin is going to go to 65K. Now, in the grand scheme of things, in the crypto world, that's approximately a 10% move. That's not a lot, right? So somebody may think, oh, cool, I'm confident about this move. I'm going to enter using leverage. So now that 10% you're going to make, depending on what leverage you use, could become 100% or 200%, right? Now that sounds great. But why is it not great? Because it can also go the other way. If you were wrong and Bitcoin does not go to 65k, 66k, whatever it is, and it instead goes down to 55k, you could then lose more than the 10% you put in. You could lose 100%. You could lose potentially even more, right? Now, as a beginner, I would stay away from futures. I think it's something that more experienced traders should do. But even in a general sense, if you're asking for my opinion solely, is I think spot trading is enough. Crypto offers very big moves. If you're somebody that's good with your risk management, if you know how to, go about investing and taking your money out when you're in profit, you should be all right just spot trading. You don't need futures. You don't need that added volatility in a space that is already so volatile, especially as a beginner, right? What's important to note is that no matter which way you trade, you're going to face fees, slippage, and spread, right? Now, when you use a central exchange, they're usually very liquid, is the word we use. They have a lot of liquidity, they have a lot of money flowing there, so you can get good prices when you're buying or selling for low fees, right? But when you come onto our DEXs, the decentralized exchanges, and you try to trade on there, sometimes your coin may have very, very low liquidity depending on what type of coins you're trading. And this can lead to big slippages, meaning, maybe you wanted to enter when the coin was $3. You press buy, but it's now actually entered you at $3.35, right? That's almost a 10% slippage. Now, something like that can genuinely happen, right? 10% slippage is a lot. I wouldn't say it's normal, but there's a likelihood that happens depending on what you're trading. We also have spread, which is a difference in prices, and fees, right? Of course, you have general transaction fees. We have something called gas fees. If you are buying a coin that is built on the Ethereum chain, right? ETH, I'm hoping a lot of you guys have heard of that, then you will typically need Ethereum to transact on that chain. If I am buying a coin that is built on Binance Smart Chain, right, then I will typically need Binance Coin, BNB, to be able to transact on there. Right? The same way if you buy something that's built on the Bitcoin chain, you're going to need some Bitcoin to be able to transact on there. Right? With the gas fees, well, it's in the name, right? Gas, sort of see it as a fuel. If you're using the chain, you're paying this fuel, you're paying this tax to be able to use it, right? And you need that to be able to transact on there. Now, cool. How do you actually go about finding these coins, understanding what should I trade, what should I get into? Because what I've already done in the video is probably mentioned a lot of different things, and it may be very confusing for you guys. What I would say is start very basic, right? The most important thing that I can't condense into one video, it's impossible, right? It's self-education and involvement. I can't give you guys a practical experience. What I suggest is that you guys make, I would say, specifically Twitter accounts. Twitter is where a lot of trading, a lot of crypto people are, and just get involved. Get into Telegram group chats, Twitter group chats potentially, right? Just interacting on the timeline, reading, absorbing. You don't necessarily have to talk to people, but just start taking those things in, right? Even I myself, that is how I actually learned a lot of things about crypto initially. Of course, you do further reading, right? As I said, self-education. When you don't understand something, just go look it up. There are plenty of people teach it online. Even me myself, I have some crypto resources on this channel. Of course, it's not completely comprehensive, but it's enough to get you started, right? So it's very important that you're constantly involved in the space, you're constantly educating yourself, and from there, your knowledge will build up and you'll sort of just start getting the flow of things. It's the same for almost anything else, right? But with crypto specifically, there's a lot of moving parts, there's a lot of big words, niches within crypto. And the only way to truly understand them, knowing I want to do this, I want to get into NFTs, I want to get into this, is by actually getting involved and getting a taste for things. Now, when we mention coins, right, one thing I want to make very easy for you guys, this website can be your best friend. If you're looking into a coin, you can go on this website. I will link this below, right? It's called CoinMarketCap, right? What this website essentially lets you do is search up your coin's ticker, the name, when you have a dollar sign and then it says that little name, you can search that up on there. And when you click on it, it will tell you everything about that coin, everything that you need to know. It will tell you what exchanges it's on, right? Centralized or decentralized. It will tell you what that coin's currently trading at, the volume, the market cap, everything that will be relevant to you when you're researching it. It will also give you links to the coin's teams if they've been put on there, so you can actually go into social media, do further research if you want to, right? And then make a decision whether you're going to be buying that, investing in it, or whatnot. In terms of when you're finding coins, it's very important we have two types of analysis, We have something called fundamental, which is, a bit more passive. It's a lot more reading, understanding what the coin is actually doing, the team. There's a lot of factors to that as well. And then we have our technical analysis, which comes on the charts, right? Typically, in my eyes, the technical analysis makes a lot more sense on the bigger coins, right? On our Bitcoins, our Solana, Ethereum, the very, very large cap coins. The fundamental analysis is important on really all of them, but even more important on the smaller coins, right? Because they're going to be affected more by their marketing, their hype, what the team is building. Because what you guys have to understand about crypto is it's a lot of speculative value, right? What people are basically saying when they're buying these coins is, oh, this is what the team is working on. I'm going to invest in them because this is what they're going to be. It's not what they are, it's what they're going to be. That's why we invest, right? It's the same as when people invest in real life companies, right? Somebody invested in Apple probably like 2002, knowing I expect Apple to be this now. I'm not saying crypto will do the same thing for you, but that's the general idea of it, right? You're investing now, expecting this company, this project to do big things, and then once those things take place and its value has risen, then you're looking to cash out, right? Now, a friend of mine, which I will also link below, is Labyrinth Capital. He publishes a lot of different education articles and even signals in crypto, right? I'll talk about signals in a second, and you guys can go look into that. I myself, I don't post a lot of crypto stuff, right? With my private mentorship, I talk to them about it a bit, but even then, nothing major. So I'm giving you guys two trusted resources that I myself use and can definitely vouch for, right? And below that, you guys can see the second resource is Bully Ventures, also a friend of mine. Now, what he does, right, or rather what his company does, is offer private sales, which are initial coin offerings. It's very similar to IPO, some of you guys might have heard of. Initial public offering is essentially you're able to get into these projects before they have launched publicly. Of course, this comes with a clause. We have something called vesting, tokenomics, and you don't get all your coins at once. They're distributed over X amount of time. But it's a form of investment, right? A passive form of investment, if you guys want. It's something you can, again, like I said, research. Just get involved in these group chats. I will link his group chat below. You guys can go in there, you can ask questions, read and whatnot. Because the thing with crypto is that, as I said earlier, there's so many different niches that you may participate in a handful of them, or you may just pick one or two and knuckle down. But of course, that's your decision to make. Because the idea with this video is, I'm not telling you go do this, go do that. I'm just giving you an outlook, an overview of these are all the things that go on, and this is how you can involve yourself in them. This is how you get started, and from there, once you get started, you guys will realize it's like a domino, right? It's like a domino effect or a chain reaction. Once you do one thing, you just get into another. You have more questions. You keep answering, you keep asking, right? And next thing you know, you're half a crypto expert, really. Now, what I would say as a beginner, this is super, super important. When you're a beginner in the space, you need to watch out for these sort of risks, the most common risks I see in the crypto space. When you start out in crypto, when you make a social media account, when you start trading, you will probably come across a lot of influencers. Guys, these influencers, right, just keeping it very simple, can make a lot of profit off of you. So you need to be careful when they're selling you a coin, right? Just because an influencer has 1 million followers, let's say, and he's saying, oh, buy this, does not mean it's going to go up, right? It's going to make you profit. It might make him profit, but not you, right? Let's just imagine, right? Let's put it into an example. This influencer has 1 million followers. He buys a coin, right? He buys this coin. Let's just say he buys like $10,000 worth. And then he goes and tells all his followers, everyone buy this coin. His coin now pumps. He already bought before everyone. You're last on the train to get in. Right, you buy this coin while it's already pumping. His 10k has become 50k. He cashes all of that out. The coin crashes. You were last to invest. You bought the top. Now the coin's gone, and you're like, oh, maybe I should have invested earlier. And you don't realize that you've essentially been swindled, which is a lot of what happens in the crypto space. There is a lot of pump and dumps, right? This is why I put such a big emphasis on self-education. So you can go ahead, you can use these resources, you find your own coins, your own investments to make instead of looking at other people. Because when you look at other people, right, especially bigger influencers, it's very easy for them to swindle you and take your money, right? Essentially, the term is they can use you as exit liquidity, right? The second biggest risk I see is marrying a coin. Now, when I was a crypto noob, I had done this with a few coins myself. It's very easy to fall into this. Now, a lot of crypto holders, investors, right, have this bad habit. When they get into coins, they sell this coin that like there is no tomorrow. Right? When I say sell this, I don't mean they go ahead and literally sell it, but they market it to other people. They say this coin is the best in the world. This is what they're doing. They're building this. They're building this by next year. They're doing blah 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 blah. And then you start listening. You're like, wow, like that actually sounds like a very good coin. But what you realize, people say the same stuff for every single coin. So then these people get stuck in this cycle of I'm gonna buy this coin and I'm just gonna hold it until it does 100x. Don't do that. Of course some coins do 100x. Of course some of them do big moves, but do you need that to make money? No, you don't. Right? Do not marry a coin. One of the most common mistakes I see with people is they do a round trip with their profit, right? They buy a coin, they probably buy it at a good level. The coin does a very big move, but they're greedy. They keep thinking, oh, let's say the coin does a 10x. They're thinking, oh, that's fine. I'll cash out when it's a 20x, a 30x. So they keep holding. And then what happens? Eventually it does that 10x, comes straight back down. And now they're just like, oh, I might as well hold now. Right? They might even go into loss. Don't fall into that cycle. When the money is given to you, when the profit is there, take it. Profit is profit. Right? That's very important to remember. Money you're making, this is essentially free money trading digital coins. And you're getting greedy for more. And I think it comes from a sense of FOMO, right, guys? People have this fear of missing out. They think, oh, if I don't catch this 100x, that's it. No. You can catch this coin, take your money out, and this coin can run to 100x. But if you got 10x, is that not good? It is still good, right? Of course, you might be annoyed that, the coin ran so far, I didn't leave something in there. But what I would recommend, right, and I'm going to make a whole video on this, it's going to be coming up, about crypto risk management and how to go about trading, managing your positions, and etc. Again, it's the proper nitty-gritty of it. But just remember, profit is profit, right? You always want to get your initial investment out to make sure you're risk-free, right? Another big risk is that beginners can come in and start gambling on memes and shitcoins, right? Memes and shitcoins are very similar to essentially pump and dumps. A lot of people, if you don't know how to research your memes and shitcoins, if you don't know how to understand, okay, this is a good investment, this is actually, good for me to like put my money in, I'm not going to get scammed, it's hard, right? It's a very simple saying, right? You don't know what you don't know. So you need to make sure you're educated before you actually do something, before you start pressing buttons, right? And that's what it is with these memes and shitcoins. They don't even have speculative value. It's just a lot of people who are trying to pump random coins with random names, hoping for the best, and they're going to make a bit of money and they're going to be able to cash it out. So in my eyes, that is just gambling. There's no actual analysis going into it, but I will touch on a few things in the upcoming video where you can look into to understand, if we look at the tokenomics of this coin, if we look at this, is this likely to be a scam or not? Right? Am I about to get dumped on by whoever made this coin? Right? And one of the other risks, margin calls, I already mentioned, right? Margin calls essentially occur when you're doing leverage trading, when you're doing crypto futures. When you start running out of money, when your position goes into a lot of loss, you get something called a margin call, right? It's essentially you're getting liquidated. They're just taking your money. You've hit your stop loss, whatever you say it as. So you need to be very careful with that. With spot trading, it is slower, but that is a good thing. You want it to be slower because then you have time to react. With futures, it can be very, very fast. You don't even get time to react. You put in let's say $100, that could be gone in like 10 minutes if you're not careful, right? So as I said before, futures or leverage trading is not something I would explore as a beginner. Maybe once get some skin in the game, you build some appetite for risk, you truly understand how things work, then you can consider something like that. And of course, it's a personal choice. But I hope that video gives you guys a good overview of crypto. I know I can't cover everything. I might mention some things that confuse you, so definitely drop some questions down below if anything didn't make sense, if you have any questions. And like I said, all the resources I mentioned, I will link them below. And the best thing for you guys to do is just keep studying from here. If you watch this video, then clearly you want to learn about crypto. So my best advice is just go use the resources I've given you and from there, just get involved in the space. That is it, guys. Thank you for watching.